The volume in trading is often misused, and for the simple reason that its interpretation is not simple. It's funny because almost all the graphics that I see hanging on the network when analyzing actions usually bring the volume down or below, but it is like a tagline, and few refers to its importance in the evolution of the price. And I want to make the observation that the volume is not an indicator as such, it is a fact, as are the opening, closing, maximum or minimum of a session. However, if there are technical indicators that have or use the volume to make trading decisions, it will be the OBV or the accumulation and the distribution, which is the OBV version, the levels by volume, the money flow index, and the Concord of Blay 5. But the volume in the trading has its importance and a lot. There's no more to look for in the trading rules of the Winston medium turn system, which gives such good results, and to observe that the volume is fundamental to make the decision to enter or not into a value. Personally, I take into account the candle movement, but in the long term, I help with technical indicators. The rules that I'm going to tell you now are relative. So what is sought when studying the volume knows what is being done by those who really have the capacity to move the market, strong hands. So the volume always has to be measured in relation to the previous bars to know if it increases, decreases, or remains stable. 2. It is important to pay attention to the place where it occurs, the resistance, the support, or in the middle of a trend. 3. The size of the candle matters, your body and top or bottom wicks. The volume and trends. In the trends, is it where the volume study can help us make better decisions, taking advantage of the pullback or throwback? As a rule, 1. The volume should accompany the price trend, increasing with the trend, either bullish or bearish. In an uptrend, the volume should decrease in the corrections, and we must assume that what is taking place is a profit taking and not a change of trend. The same for bearish trends. Third, in the areas of conjunctions, which is continuation triangles, pennants, or rectangles, the volume should gradually fall and rise in the resolution of the figure. Number 4. If in the area of upward conjunctions, the volume does not decrease or tend to increase, we should understand that the volume has concluded and that strong hands are selling. But the same happens in a strong downward trend. If the price comes close to the support and the volume in the conjunction doesn't decrease, increases, or when the figure is resolved, we will have an upward movement. 5. When the price and volume diverge, it works the same as a momentum indicator, such as MAD or RSI, but they are indicating a possible violent movement against the main trend. Climax buyer and seller. So the climax buyer or seller tell us that weak hands are in the market, but in a strong uptrend before the market reverses, the volume is usually anticipated by marking a maximum, which is known as buyer climax, and weak hands have entered the market and are buying all the paper that the strong hand offers them. And it also happens in a downtrend when the volume increases exponentially, and it is almost certain that the weak hand is getting rid of its position at any price. Candles together with resistance and support. But first, when we see a large candle, the elephant candles, with an important volume, we have to place it. If it is on support, it is likely that purchases have entered. If it is in resistance, we should think that sales have entered. But in this lesson, in the lesson that I speak about elephant candles, I make a good detail of how to treat these types of candles. And we can have a bearish candle with a significant increase in purchases and a bullish candle with sales at discretion. 2. When we reach a support marked with a candle with an increase in volume and subsequently the price moves laterally, gradually decreasing and accumulation is taking place. Third, the same to talk about distribution. The price comes with volume and large sale. So to ladder stand up and move laterally, I'm talking about an unusual volume. Sometimes the price doesn't move laterally. There are movements in V and are really difficult to catch. But we can pull a higher volume and configurations of Japanese candles like dojis, hammers, and morning stars. but trading technical indicators to measure the volume. And I have used several techniques indicators to measure the volume, but I'm left with two: the volume by levels and the OBV, without neglecting the Concord of Blade Fire, which I think is a great technical indicator. But levels by volume or volume by price. The interpretation of this indicator is very simple. It warns us of the amount of volume displayed in a support or a resistance. The only thing that we need to know is that the supports and the resistance are the critical points of the graphics, the areas where the price has already turned in the past and left many people trapped, or many people with a silly face watching the price escape without them inside. The volume in trading, as what moves the market in the background, in addition to the fundamentals of the company, is greed and fear. And we have to play with those feelings in our favor, buying in support and selling in resistance. And this indicator helps us to discern how strong a support or resistance can be. And it is an auxiliary indicator, and it should not be the only tool to make a trading decision. The OBV. This indicator is most useful and helps us detect possible changes in trends early. The indicator goes up or down every day, depending on the closures of the candles and the volume of that day. But if the candle closes below the previous day, the volume is subtracted and the slope of the OBV goes down. Conversely, if the candle closes above that or that the previous day, the volume is added and the slope of the OPV will go up. Signal input confirmed by the OBV following the CAB trading system. The volume in trading, how does it help us? Well, we'll see. But that in movements in which the price moves laterally, the OBV will become bullish or bearish before the movement really occurs. Now the Concord of Blade 5. The Concord is a magnificent volume indicator which tries to interpret the movement of a strong hands and move with them. It is a complex indicator, quite different from the previous ones, and requires learning to manage, since not only does it attribute the volume to strong or weak hands, it also aims to discover the trends and where it can move. Now, crypto up, actions down. Massive growth in cryptocurrency trade volumes has been associated with an equally large drop in securities trading volume. In the daily trading volume of US stock, it reached a minimum of 3 years in August, ostensibly driven by a focus on older investment strategies. The lower trading volume has also been associated with a considerable change in funds outside the stock market in recent weeks, while traders are worried that the market is at its peak.